We've been talking about the infinite banking concept, so named because there are infinite ways you can use it. And today we're going to talk about yet another way you can use the cash value of life insurance.
This is an example of how someone used the cash value in their life insurance policy to expand their business. And we thought it would be important for us to bring that person right here into the studio today so that they can tell their story and answer all your questions right here on Wealth Talks.
Joining us today is our son, Ben. He is the co-founder of Brothers Fab Shop. Welcome to the show, Ben.
Thank you. It's exciting to be on the Wealth Talks podcast. I came prepared, but it looks like it's just cameras, lights, and microphones. No welders or grinders, so I can probably take these off. What do we talk about first?
What is Brothers Fab Shop and how did it get started?
Believe it or not, it's actually a set of brothers that started the Fab Shop, and it's Jesse and I. Jesse was on here right before his wedding a couple weeks ago, and we started because we just loved to weld. And it started with that welder you bought back when I was 13, of course. And I think we did some gate repairs for ourselves and then made a gate for the neighbors and then made some shooting targets out of steel. And one thing led to another, and eventually we had a business on our hands. Now, I don't think either one of us had ever dreamed of being welders and fabricators, but it was natural when it came. And once it started coming, we definitely wanted it. And so we put in a lot of time and effort over the years, and we have a nice welding and fabrication business now.
Well, you both work in McPhee Insurance.
That's true.
But during your off time, you would often go out to the shop and tinker and weld because you enjoyed it. And from that enjoyment, a business just kind of grew out of it.
That it did.
So from all of that, then you were looking for some tools that you wanted to expand your tinkering with.
That's the neat thing. When you're actually making money with the tools you have, then it becomes not only logical, but almost necessary to buy more tools. And that is a great quandary to be in of needing to buy a tool, because tools are fun to buy whether you need them or not. But if you need them, it makes it that much sweeter. And so for this expansion that you asked me on here to talk about, we were looking for a tool, a shop press, which is a hydraulic press that can press steel into various shapes, and you can put different tooling on it to make different things. And that's what we were looking for that kicked off this whole expansion project. And the reason we used our cash value of our life insurance to make it happen.
So you weren't necessarily looking to do a huge expansion. You were just looking for a particular tool that would help you expand your business a little bit just because of what it could do.
That was it. There seems to be two ways that we've bought tools over the years, and that is we need this tool to do this job more efficiently, and we buy it. The other one is a tool comes across our path and we know it has potential in our shop and we buy it. This was a little bit of both because we had that tool we were looking for this particular job. And when we went to get it, Jesse found out there were a whole lot more tools in this same shop that was being liquidated that we could see potential for in our shop down the road.
Fill us in on the details of that.
Interesting story. Jesse was looking on Craigslist and found an ad for a hydraulic press, went to see it, and it was an entire machine shop. And the guy says, we have to have this stuff out of here in 2 weeks. So make me an offer on all of it or whatever pieces you want.
Now, when Jesse went to see this shop press initially, he went to see it because it was used, but it was at a fraction of the cost of what you would have purchased it new. Is that correct?
You're right. And it was technically bigger than what we needed to accomplish what we were looking for. But it was even nicer than what we could have got by with. So it's a 50-ton hydraulic press. We could have got by with something smaller, a pneumatic press even. But this press was listed for, I think it was $2,250. I think that's what the Craigslist ad was for. And this machine new would have cost over $16,000.
Wow. So that's quite a savings.
Yeah. So if it checked out as good as it looked, then it was a deal. Now it's bigger than most people would stick in their garage too. So we had that in our favor of, maybe the ad still being up. He went to look at it, checked out great. It worked well. it would accomplish what we need and more. And then there's all these other tools besides.
So he went to go look at the shop press and came home with a big decision to make.
That's it. So we went back and we looked at all the equipment in that shop, and we talked to the guy who was selling it off. He wasn't the guy who owned it. He was the liquidator for this company. And we made him an offer. We said, we'll take everything in the shop, $50,000. And they accepted the offer.
Now, this makes me think of what Nelson Nash, the author of the Becoming Your Own Banker, the Infinite Banking Concept, said that he found himself in a position where some raw land was being sold for a fraction of the cost of what the market value was. And he told the person to hold real still while he went and got the money. And of course, he went and got the money from his life insurance policies. So you couldn't even have entertained this idea unless you'd stored money someplace.
You bring up a great point. Yes, absolutely. And it felt a lot like that. I remember that story. He would tell it in his seminar. It's in the book. I think it's in the book. I remember he told it in the seminar for sure. But yes, I think opportunity comes to you when you have available cash. But there is a fine line to walk, because I think distractions can also present themselves, where if you have cash, you must spend it. But I see having cash as a tool, yet another tool, the tool addict that I am. Having cash is a tool where you can move in and take advantage of a good deal. You can expand your business. You can, finance yourself on something if you don't like the rates or the terms of financing that's available elsewhere. I don't see it as an end all or something that's just saved for retirement. Like I think a lot of people look at savings. I see it as something that can be used to make your life better and efficiency. I think we're only limited by a couple things in life, and one of those things is time. Once it's gone, you can never get it back, but you can get money back. And so if you can use money in some way to redeem time that you would have spent doing something else, then you're getting time in exchange for that tool of money, and you can't technically buy time.
Now, Ben, you have a lot of tools.
True.
You've got a lot of toolboxes.
I confess, you're right. You're right.
And you don't use every one of those tools every day.
Oh, no, definitely not.
And as you were growing up and your siblings and all, your mom and I saw that it was very tempting to have money, a tool, burn a hole in your pocket, go to the store. Can I have this? Can I have that? So what taught you the lesson that money doesn't have to be spent just because you have it?
That's a good question, because I know what you're talking about. I see a lot of kids, if they have $1, they're looking for something that's $1. And instant gratification type stuff that you'll see at stores. It used to be, I don't know, do they still have these things as horses that you put coins in and you can ride at the...
We just saw one the other day for 10 cents at Menards.
Yeah, okay. That's probably a good deal now.
I was thinking so myself, because I thought it used to be a quarter.
Yeah. So I remember back in those days, those things, when you're a kid, they look so exciting. And I remember wanting to go on those rides as a kid, but I remember also that you and Mom wouldn't just say, no, we're not spending money on that. You would talk about, well, we could spend money on the horse ride outside the store, or we can save that money and sometime we can go horseback riding at the beach. And when you're riding a real horse on the real beach, it doesn't even compare to the grocery store, I'm sure. I don't know, because I've never ridden a grocery store horse. I'm somewhat deprived as a child in that sense. But I'm happy about that, because it taught us, I think it illustrated that just because you have money and you can doesn't mean you need to. And if you say no to enough things that might be fun in the moment but aren't ultimately what you want, you have the funds and the tool to do big things and more amazing things that build memories. If I had ridden the grocery store horse every time, I probably wouldn't have remembered that day I rode the grocery store horse. But I definitely remember the days we rode on the beach as a family, and I'll never forget those.
You were in that kind of position when you did this expansion. You needed money, and you had that money somewhere.
Yes, I did, thanks to life insurance policies, because I don't keep $50,000 in my bank account. Now, technically, Jesse and I were buying this together through our company, and so we were both contributing capital, so I guess $25,000. But I don't keep $25,000 in my checking account. But I do keep $25,000 in my life insurance cash value And I know that I can borrow that much against my policies anytime I have the need for it. So we're up against a 2-week deadline where they have to have this equipment out of there. And they want to sell it fast. That's why they're making us a good deal on it. But we have to be able to take it away fast. Otherwise, we don't get the good deal.
Wasn't there another person bidding on this too, but was subject to a bank loan?
There was somebody else on it. I don't know what the circumstance is, but the man that was selling at the liquidator, he was a gentleman. He was one of those old style handshake guys. And he told us, you came to see it first, you get the first offer. And somebody else had actually made him an offer already. And he said, because you guys came to see it first, I will entertain yours first. So that was pretty cool.
And that's where cash speaks louder than other things too. It's nice to go garage sale shopping or shopping if you've got money in your pocket. Sometimes it's not a lot of fun going and just looking when you really can't afford to buy anything. Not that you even buy something when you got the money in your pocket. It's just that it gives you a different level of enjoyment, knowing that, yeah, you could buy that if you wanted to, but it allows you also to maybe dicker a little bit and find out what the real price is going to be.
Yes, it gives you options. And you talk about options all the time. I've heard you say it once. I've probably heard you say it dozens of times that you like to keep options on the table, because so much of the financial planning that people subject themselves to takes options off their table. They may be planning around their retirement event. And I've heard you tell people, well, do you know what's going to happen between now and then? Let's keep your options on the table. And we've seen it happen a lot. People start a policy, they think they're going to be able to fund for a long time, and they end up needing to change premiums or reduce it. People start a small policy, and they quickly find they need to add more policies. Things change, and so it's important to be able to keep those options open, and I think cash allows you to do that.
You bought a lot of equipment at that sale, and it's not in your shop. So what happened to it?
That's true. We did. We got a good deal because we bought a lot of equipment too, and we're getting it out of there for them. But we knew right away that some of the pieces were not going to serve us, or they were going to take up more space than what they were worth. Because I can't think of anything right now that I would have wanted to sell if I could have kept it. And maybe that's just my tool problem, but we bought, how many lathes were there? There were 3 lathes, 2 mills. And so there were some duplicates of items, which would have been fun to have, but not things we needed. So we sold off some of the stuff that we bought. Of course, that offset some of the investment as well. So we recovered some of the initial outlay. So the tools we did keep are probably an even better deal than what we could have got them for if we kept everything. So that worked out good.
You were under a 2-week time crunch. And we know you got the shop equipment. So tell us about what it was like getting a policy loan. Obviously, you met the deadline, but tell us what that process looked like.
Yeah, that is I'm glad you asked that, because that's probably not something everyday people would think of. It's easy for me to gloss over the facts just because I've been funding life insurance since I was a teenager, and then I took over the policies you started on me when I was even younger. So yeah, good question. When we shook the guy's hand and said we would do the deal, we went directly to the bank and we took money out of the company for our earnest money, went back and gave him the check. And then we both requested loans from our policies, and I think we requested a rush. I think it's 10 business days that they have, so we could have had the money in time, no problem. But we just requested a rush if they could and told them we're buying a machine. I had the money in 3 days.
In 3 days?
Yeah, 3 days.
And did you have it deposited directly to your bank account?
Yeah, I had a direct deposit.
Wow.
So we just took the money then and went and paid the guy in cash or with a check. And he cashed the check and we took the equipment.
So just a little side note. Later, that guy told you that he felt kind of guilty because he found out you were taking money from your life insurance.
Yes, he did.
And you didn't feel bad about it, and you didn't want him to feel guilty. So can you kind of explain why he shouldn't have felt guilty?
The reason and now neither of us were married at the time. And so he felt okay about that we weren't married, he said, because what was happening in his mind is that we were taking away from the death benefit protection of our life insurance that would have gone to our spouses. That wasn't the case because we didn't have a spouse to leave it to at the time. But what we were doing is leveraging that death benefit to borrow the insurance company's money. Now, I'm not concerned about that, even if I did have a spouse at the time, because I have enough death benefit to provide for that, plus be with the collateral for that loan that I was taking from the insurance company. So if I were to die in the meantime, and of course, I'm speaking to the choir here, but that death benefit pays off my cash value loan that I took. So I owe nothing to anybody. And the surplus of that death benefit would have been delivered to whoever my beneficiary was.
Michelle, I remember you talking to one of our clients one time that was really worried about taking a loan to put a new roof on their house, that it was going to take money away from his spouse if he died. What did you tell them?
Well, I said, your wife would rather have the new roof, if you pass, than the extra few $1,000s in the benefit.
That's a good point, because not only does she have to spend the money to get the new roof anyway, if it's leaking, but she has to also manage the contractor who's putting on the roof and coordinate that and choose the roof color and shingle and type and dates and all that. If all that's done, and she still gets a death benefit besides, that makes more sense.
We want to know if you have paid the loan back, and we want to hear about how the expansion has affected your business. We will have questions for you right after the break.
The policy that works best for the infinite banking concept is a dividend-paying whole life insurance policy with a paid-up additions rider. You'll want this policy to be structured to allow the maximum cash value accumulation without creating unnecessary tax consequences or inhibiting the cash value growth for future policy years. At McPhee Insurance, we specialize in these types of policies. We are licensed in all 50 states, so no matter where you're located in the U.S., we can help you. Call our office at 702-660-7000 or email us, team@mcpheeinsurance.com.
Ben, you took a policy loan to purchase all that equipment. Have you paid the loan back yet?
I have paid the loan back. And the nice thing about cash value loan, of course, as you know, and have taught people many times, is that all you have to pay back on a policy loan is the loan interest. As long as I kept paying the interest due every year, I never would have had to pay the loan back at all. I could have kept the money out if I wanted to. I didn't want to. I had some extra money to pay the loan off with. What we usually help people do is decide, okay, how long do you want to take to pay this loan back, or what's a comfortable monthly payment that you could make, and restore that loan back to the insurance company so that the money's available to borrow again when they need something else.
And you said you had some extra money that you could pay it back with. Why didn't you just use that money to buy the equipment?
Oh, I did not have the extra money when I was buying the equipment. I sold a vehicle shortly thereafter, so I think I paid the loan back in a couple of weeks, and it wasn't out very long at all. Normally, I would have amortized that loan, figured out what I wanted to pay per month, and contributed that. Or as income came in, I would have paid it off in chunks at a time, so it would be there again. But in this case, it came in all one lump because of that vehicle sale, so I just repaid the policy loan. That was that.
So with this unexpected expansion that came about, did it affect your business?
Yes, it did. It affected business in 2 ways. And the one way was it filled up our workspace with equipment and we could barely move in the shop. And that was frustrating to try and work through that. But in a good way, too, it made more jobs possible. And jobs that we wouldn't have been able to entertain before at the rate that we were able to be competitive with were no problem. They were a piece of cake. And it made jobs that we were doing already even easier and faster.
I remember, too, there was an unseen to that. As you sold off equipment, you made connections with people that brought more business to you.
We did. That was very neat to see. I still remember, though, it was a lot of work moving all that equipment. These are thousands and thousands of pounds. We had forklifts on both ends, but it's still fatiguing moving lots of heavy stuff because there were pieces we had to move by hand as well. And I still remember Jesse and I asking each other, would we do this again? And from the point in time we're at right now, looking back on it, the answer is absolutely yes. But right then, after we had just got it all back in the shop and we're moving slow, we thought we would, but we both had a little bit of honest doubt. It was definitely worth it, especially now that the moving process of it is all over. But I think there's a lesson that can be drawn from that too, and that is that opportunity often involves work and often hard work. True. And it's easy to sit here on the podcast and talk about the highlights of the trip, and probably somebody's listening going, that's really inspiring and hitting all these high points. Yes, those are awesome, but somehow those are the ones that we remember more prominently as well. There's a lot of work that goes into it. Not all of it was fun.
Something else that happened is you met people in selling off some of those pieces that helped you understand how to use the pieces you were keeping better.
Yes.
And then you would create videos to share with other people about how to do this. And then that brought a completely unforeseen expansion.
You're right. It did, because we were posting our work on Instagram as Brothers Fab Shop. That's our Instagram account, and using the tools that we acquired, just, everyday shop stuff. And we had a reel that went viral, picked up thousands and thousands of followers. I think we're just over 75,000 followers now. And so we've also picked up some influencing deals where a company's reached out to us and has hired us to make videos for influencing for their products. So that was a whole nother line of work we didn't even set out to pick up, but something that just came because we were posting what we were already doing and open to ways to serve people.
And because you had cash value in your life insurance.
It all stems back to being able to take advantage of an opportunity. Yes, definitely.
I need to go back to the loan repayment just for a moment.
Okay.
You said all you needed to pay the interest. Really, you didn't have to pay it back all at once. But there's something really unique about cash value life insurance if you don't pay anything but the interest that I think our listeners really need to know. And that is that the money that you borrowed to buy that equipment was still earning compound growth, even if you had not paid it back.
Yes. And that, I'm glad you highlighted that, because we kind of ran over that pretty quickly. But you are not borrowing your own money when you take a policy loan. Your money is still earning the guarantees it's going to earn in a policy. Yes, that's unlike a bank account, unlike a CD, unlike an IRA, unlike a 401k, unlike just about any financial investment. If you borrow your money or take your money from this investment, done. It's not earning anything in the investment anymore. A policy loan is unique in the fact that you're borrowing the insurance company's money from their general fund, and they're willing to lend it to you because they know they owe you more than that if you were to die. And so if you were to die, worst case scenario, you're dead, can't pay the loan back. They know that they will be able to pay that loan back out of your death benefit and deliver more to your beneficiary besides. So it's really a no-risk loan for them the way I understand it. Your cash value amount of your policy is still earning the guaranteed values that you see on that policy illustration when you buy it. And so yes, taking a policy loan, even if I just paid the interest on that, my policy would still be growing just like it was promised to do.
That's one of the things that makes the infinite banking concept infinite.
Yeah, it's a great thing. It's a great benefit. You can't get that anywhere else. Some people might be wondering, why did I pay the loan back if it's going to grow anyway? And that is because when you take a loan from the insurance company, there is interest associated with that. I think that time is right around 4%. I'm paying 4% every year to the insurance company to be able to use their money if I keep the loan out. Since I had extra capital I wasn't using at the time, just pay back the loan, and then I'm saving 4%. So if you had an interest-bearing account that you could put money in and take it out, and when you put it in, you earned 4%, and when you took it out, you didn't, would you put the money in that account? That's kind of the question.
And money has to be kept someplace. So we might as well keep it someplace that's really lucrative for us.
Absolutely, because if I had been buying CDs and keeping my money in CDs, for example, could I have gotten it in 2 weeks? Yes, probably, but there probably would have been a penalty unless I just happened upon the maturity date of that CD. If I had kept my money in an IRA, would I have been able to get to it in 2 weeks? Probably not if it was for something that benefited me. Because
You'd have paid a penalty if you did.
Yeah, because you'd have to end that or withdraw it.
Yeah.
But they have rules on IRAs, right? That you can't use it for anything that benefits you directly.
You can withdraw the money and
Okay.
pay a 10% penalty and income taxes on it anytime you want to. But to borrow against it, it's a completely different story.
That's where you can't use it for your own personal benefit?
That's correct.
Okay. So I would have had to say goodbye to my IRAs that I had been funding for who knows however many years to do that opportunity. Whereas my life insurance, I took the money in 3 days and sent it back in 2 weeks, and it just kept going like it never even saw a change because it didn't. I was using the insurance company's money.
Infinite banking is just very exciting when we understand these elements of how easy it is to get to our money, not our money, the insurance company's money, how flexible it is about making loan repayments, how we still get guaranteed growth on our money, even, while we're using the insurance company's money. We haven't even talked about dividends, which are the non-guaranteed part, the icing on the cake. We've just been talking about these main things, and it's so exciting about how it allows us to expand our business or to do whatever it is we're doing in our life, whether it's providing education for our children, putting a roof on a house,
Paying our property taxes, paying our home insurance policy with it. There is just an infinite way that you can do this and recover the money that you actually have to spend, plus earn guaranteed growth on it at the same time.
And when we understand it, it's exciting.
It is. Money is a tool, and the better care you take of a tool, the more faithful it will serve you for your entire life. If it's a good tool, it can last a lifetime. And I think money's no different. The better care you take of it, the more it's going to benefit you.
Ben,
I want to see something squished.
Oh, in that new shop press.
I want to see that
These tools are fun to use, and that shop press is very fun. Let's go squish something. I got this baseball right here that I thought it'd be fun to squish in this press. This is a 50-ton press. If you took a Ford F-150 pickup and parked it on this baseball, it would not be as much pressure as this press can exert on it. If you took 20 F-150 Ford pickups and you stacked them all up on top of each other and you were able to push them on the ball, that's how much this press can push. That's a lot of weight. So I'm going to turn the press on. We'll put the baseball in the press. You want to be careful not to get your fingers in here, by the way, because it doesn't really care what's squishy. And then if you'll do the honors, it's the top button until that ball is flat. Go ahead. Boy, that thing just blew the sides out of it. Go ahead and lift the hydraulic and let's see what it looks like. Right there.
Oh, wow.
Well, there's inside of a baseball, folks. That's incredible.
It is. It was like, it was squishing down and there was like juices coming out of it.
That's amazing.
That's called being put under pressure.
Definitely. Look at the mark from the hydraulic ram right there. Anyway, that's the first time we squished a baseball out. That's fun stuff, but it's fun to bend steel with this too. And it makes our job a lot easier.
Inflation and rising prices really kind of put us under the press. And next week we're going to talk about inflation and how to deal with rising prices right here on Leftovers.